Here we are. We're going to take a look at Section 8-2, which deals with preparing a post-closing trial balance. Our learning objective for this time is to prepare a post-closing trial balance. But let's take a look at what these words mean. Post-closing. Okay, so post-closing. Closing means we're doing our closing entries. As you recall, we talked about READ, revenue, expense, income summary, and drawing. Those are your closing entries that you have to do, and in that order. Post-closing means after closing, so post meaning after, and then trial balance. Well, we've heard of the word trial balance before. We did a trial balance when we went through and completed our worksheet. The very first column on our worksheet was a trial balance, and the purpose of a trial balance is to go through and prove that your debits and credits equal. So when we go through and do our general ledger accounts for our closing entries, we really need to look at all of our accounts. And this is what our ledger looks like. We have our account title, our account numbers, and our balances. Remember, your account number will clue you into the classification. All the accounts that starts with 1s are assets that have a debit normal balance. Accounts that starts with 2 are going to be liabilities, and they have a credit normal balance. And if they start with a 3, that is owner's equity. Our capital account has a credit normal balance. Our drawing account is a contra owner's equity account, which means it has a debit normal balance. And then income summary is a temporary capital account used just to put things into. So what we do is we open up our ledger and we look at all of these accounts that have a balance. But take a look at this one, dash, 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 because we just went through and closed it. When I look here, this is my sales account, which is a revenue, starts with a 4, and then all of my expenses start with a 5. All of these have dashes. That means, great, we went through and did our closing entries, and we closed all of our temporary accounts. Remember, the only accounts at the end of the fiscal period that should have a balance are your assets, liability, and capital account. Notice I didn't say owner's equity. I said capital account. Everything else must be closed, which means it must have a 0 balance. So we went through and zeroed all of these out. You can tell by the dashes. And again, in MindTap, we went through and used zeros in both our debits and credits. So our post-closing trial balance is a term, and the definition is a trial balance prepared after the closing entries are posted. So again, after posting our closing entries or following, we're going to prepare a trial balance. Again, purpose of any trial balance, prove debits equal credits. So what does a post-closing trial balance look like? This. Okay? Heading, spot for account titles and debits and credits. We start on the top by filling in our heading, and our heading is always going to be the name of the business, the name of the document, and the date. Followed next, we're going to fill in every account that has a number. If it doesn't have a balance, it doesn't go on there. So again, when I say any account that has a number, I mean any account that has a number balance. After you put in your account titles, you can also simultaneously fill in your account balances. So I would write cash and fill in the balance. Do that for every account that has a balance. I'm going to then draw a single line. The single line right here indicates that I have done math and that there's going to be a total on there. After I do my single line, I'm going to take out my calculator and I'm going to add it up. Add up my debits, put a number. Add up my credits, put in a number. Then I look and compare my two numbers. Do they equal each other? If they do, whoop, whoop, you did it. You got your trial balance to equal. Now here's the thing. If they don't equal, you know somewhere there's a mistake, and you're going to need to go back and find and fix it. Maybe you did the math wrong when you did your adjusting or closing entries, and you have to go back and redo some math. But the point is, you know at this point, that's what we love about accounting, is there are checks and balances, a way for you to check to see if your work was done accurately. Okay, so we have our totals. Once we know we have our totals, we're going to write the word totals with an S over here on the left-hand side, and then we'll go through and put our double rule in there. Okay, our double rule means these two numbers equal. If I don't put a single line and a double rule here, it just kind of looks like it's another number, like in its account, like I have an account called totals. So this makes it stand out. So when we go through and complete our work for accounting, this is our last chapter in our first unit. Can you believe it? It took us a whole semester to cover one unit. We have done what is called an accounting cycle. An accounting cycle basically is activities included in the recording of the financial information for a fiscal period. So this is an example of our accounting cycle. You will need to know the steps of the accounting cycle. The very first thing we're going to do is we're going to analyze transactions. Taking a look at our source documents, then we put them in a journal. After we journalize them, we go ahead and post them into our ledger. We continue to do that throughout my whole fiscal period. At the end of the fiscal period, that's where I'm going to go through and prepare a worksheet. That's the very first step at the end of the fiscal period. Once my worksheet is done, I'm going to prepare and journalize and post my adjusting entries. Once I've journalized and posted my adjusting entries, I can prepare my financial statements, which is an income statement, a statement of owner's equity, and our balance sheet. Those are permanent financial statements. They are always going to stay there. Worksheet is not. Okay. So once we have gone through and we have prepared our financial statements, I'm journalize and post my closing entries. So those are my closing entries, and remember to read revenue, expense, income summary, and drawing. Step number 8 is what we're doing right now. We're preparing that post-closing trial balance. That's it. We're done. That is the very last step at the end of the fiscal period. Then our business stays in operation, opens up the next day, and we have to go through and repeat this. So this is a cycle that we do every fiscal period. Every corporation does this. So again, our learning objective for Lesson 2 is to go through and prepare a post-closing trial balance. So when we take a look at work together and on your own, I'm actually completing the on your own right now, not the work together. So be aware that this is the on your own, not work together. The first part of this is we're going to go through and prepare our post-closing trial balance. Is we have to look at these list of accounts for Repair World, and we need to go through and decide if they're going to be on our company's post-closing trial balance. Now, here's the only accounts that appear on our company's post-closing trial balance: asset, liability, and capital. If it's not one of those, it doesn't go on there. And notice I said capital, not owner's equity. So we're going to run down this list of accounts here, and we're going to ask ourselves, is it an asset, is it a liability, or is it our capital account? If we say yes to those 3, we check it. If it's not those, we don't check it. So cash. Classification of cash. You're right. Asset, we mark it. Petty cash. Well, this cash is very similar to that word cash, so guess what? Still an asset, let's mark it. Now I get to this account. Accounts receivable, eat, right, eatery. Accounts receivable. I'm going to receive something. That makes it an asset. Account classification starts with an 1. I got to mark it. Remember the question we ask, is it an asset, a liability, or capital? Supplies. Supplies, we own it. It has value. That makes it an asset. Prepaid insurance. Well, I own the insurance policy. It's worth money. So therefore, that makes it an asset as well. I get to this account right here. It says accounts payable, Lakeview Supply. Well, payable. Payable means I owe someone. Definition of a liability is anything you owe. So therefore, accounts payable is a liability. I got to mark it. Remember, I only am checking assets, liabilities, and capital. I get here, Sawyer Parkety. Capital. I have to mark it because that's what I said. Asset, liability, or capital. I mark it there. So Sawyer Parker drawing. That's not an asset, a liability, or a capital. It's a contra owner's equity, not marking it. Income summary. It's an owner's equity account, but it's not capital. Sales, revenue, not an asset, liability, or capital account. Advertising expense, same thing. It's an expense. Doesn't fit in there. Cash short and over. Also an expense. Doesn't fit in there. Insurance expense. Well, heck, the word expense doesn't go on there, so I'm not going to mark it. So I'm going to say, okay, let's go ahead and check this and move on to step 2. Let's grade this one. Woo! I did a good job. Let's go ahead and do the next step. So we're going to prepare a post-closing trial balance. So I'm going to go ahead and unpin this, move it over here to the side. So basically what I have is the list of all of my accounts. So my directions read, the general ledger of Repair World for the month ended December 31st is given in the question assets, which is right here. Prepare a post-closing trial balance. Well, the only accounts that go on a post-closing trial balance is any account that has a balance. So here's my ledgers. So I click on the first one, open it up. look, cash, balance, $13,600 as a debit. So I'm going to type that right here. Now I'm going to click on petty cash. Petty cash, asset, balance, 150 debit. That's going to go here. Accounts receivable, Eat Right Eatery, balance, debit, $2,996. Supplies, asset, $240. Prepaid insurance, asset, balance, $520. Then I'm going to go to accounts payable, Lakeview Supply. Liability account number starts with a 2, and it's going to have a credit balance of $596. Sawyer Parker Capital, open it up. It has lots of transactions in here. Its ending balance is $16,910, and that's going to go as a credit. Now, if I check all of these other accounts, you're going to see that they are zeroed out. So if you have an account that does not have a balance, it does not go on your post-closing trial balance. If you take a look at the post-closing trial balance, the heading is name of the business, name of the document, and the date. So the next thing I have to do is I have to get out my calculator, and I'm going to go ahead and add this up. So I'm going to take 13,600 plus 150 plus 2,996 plus 240 plus 520. And that's going to give me $17,506. Okay. Using my calculator, I'm going to add up my credits. 596 plus 16,910, and that gives me 17,506. Guess what? These two equal. That gives me my happy accounting dance because that means I have done my post-closing trial balance correctly. The whole point of what we are doing is to make sure that our post-closing trial balance has our debits and credits equal. So I'm going to go ahead and click on Grade Final Step. So we go through. Here we go. I got it all done right. My post-closing trial balance is correct.